Well, China has been and should really be a significant overhang. The economy is doing quite well. You heard a lot of good data from earlier reporting. The thing that could derail the market and derail the economy is if this trade talk escalates and we do enter a trade war. It would be bad for everybody. A lot of companies are talking about the negatives associated with higher prices or slowing sales. If we get some sort of resolution or something better in China, we think that the market is due for another leg up. If we don't, it's got some downside. In the way the negotiations have been going, we wouldn't buy on news like today. Rather, you want to buy when you have a sell-off because we do think the market's in a trading range and you want to buy weakness rather than chase strength.
Jamie, what do you think? We've got a lot of different things to consider here. Besides what we're talking about with trade, we have midterm elections coming up. The dollar is pretty strong, but hey, so is the economy. So what would you do with your portfolio? If you have money to put to use, when would you get in, or would you, and where?
Well, I think right now is the perfect time to be investing in emerging markets. I mean, the last couple of years, you've seen really big run-ups in emerging markets. They're off about 17 to 18% on average right now. So if you're looking to put some money to work, you should put money to work where, if the trade wars end, the places that have been hit the hardest will also recover the fastest. So I think if you're an investor looking down the road, not just a couple of weeks, but a couple of years down the road, the emerging markets, the economies there are going to be the leaders in the world for some years to come. So I think that's where you should be paying attention to. On the front, we talked a few minutes ago about the trade talk. I think you have to remember that the midterm elections are just a couple of months away. The Republicans, the president, do not want markets being down going into those midterm elections. So we're probably going to see, if nothing else, a lot of repeated, starting and stopping of talks with China. So I think the cynical part of me would say that there's probably a little bit of that going on for the administration, trying to juke up the markets a little bit to make sure that they don't go down leading into the election. Because that's really the one thing the president has going for him right now is that economic circumstances in the markets have been very, very strong. If that doesn't go well, it could easily lead to that blue wave that has been discussed many times with Democrats taking over the House and potentially the Senate. So we have to be very careful when we look at these particular headlines to make sure that there could be some political motivations involved in those.
Jamie, I want to go back. I want to go back and revisit your comments about emerging markets. I think that's a bit more of a risky take than some of our other guests have been saying more recently. I mean, you have the dollar strength. We expect interest rates to continue to rise here. Doesn't that only just harm what's going on in the emerging markets? And they're already in a bear market. Just because they're down doesn't mean they're turning around.
That's correct. And I could be completely wrong about this, but my thesis is very simple. You have to believe that the pace of interest rates in the United States is going to accelerate beyond what's already known in the market. I don't believe that's the case. I think that the Fed has telegraphed pretty well what the pace of rates is going to be, so you can sort of take that one off the table. In addition, not all emerging markets are created the same. I mean, if you look at Venezuela and Argentina and then compare them to India and China, you're talking about completely different situations. So even in those particular economies, there are companies that have incredible profits, like Reliance Industries in India or C-Chip in China, Samsung in the Koreas. I mean, you're talking about large companies, large profitable companies that you can buy on the cheap right now. And I don't know why you wouldn't do that if you were an investor looking down the road a couple of years. It's a perfect time to be doing so. In addition to that, the emerging market bonds are also places that you can look. I mean, you have emerging market bond mutual funds that are down 8 to 10% that have yields of 7 or 8. Ed, you've been hearing in the news recently about pension plans have been suffering because they went into emerging markets pretty heavily a couple of years ago. Well, now's the converse. You can actually get in, get the yield, and when they recover, you'll be able to get a little return as well on the bond side.